Welcome back, traders, to lecture 2. And this lecture will be going into depth of price action and going back to reference previous support and resistance video and how you use price and support and resistance and tie them together to make better levels of trading in order to find directional bias of the market, in order to find good entries and good exits on your chart. This will all tie together and paint a better overall picture for you to pretty much have a bird's eye view of market entries, or maybe sniper-like precision in the market once we tie all this stuff together. So again, the previous video was on support and resistance. So again, we will mark areas of support and resistance back on your charts, and we will use these areas in order to label better areas of support and resistance in order to find better levels of trading. And these will be price action zones where you can map out price and what price has done in a certain area in order to have a better overall picture of what price will do once it reaches that level. So again, yes, we have support and resistance marked on our charts. So when you have support and resistance mapped out, I'm going to zoom in just so you guys can see. You can see that price again reaches certain levels and it waves up and down through those levels, and then eventually it breaks in one direction. And price gets to a level again, which was a previous level, and then it breaks out, pushes down, finds another level, so on and so forth. So you would ask yourself, hey, these support and resistance lines, they work. So why wouldn't I just mark these on my charts and just wait for price to reach those levels before I find a trade? So if you see right here again, as I mapped out on the previous video, that price overshot this level. So if you were new to the market, new to trading, and all you knew was, simple support or simple resistance levels, and hey, once price break these levels, you look for a trade and jump into the trade because, hey, price broke that level, price failed at that level and broke the level to the downside, and buy or sell based off of this principle. If you look here, you'll see that price broke the level to the upside. It failed to close above this level. Then price retested this level a few times and then broke to the upside. You being a novice trader would have thought, hey, price broke through resistance, turned resistance into support, and then a big momentum candle compared to these two candles pushed to the upside. Let's jump in the buy. And as soon as you jumped in that buy, the market snatched your orders, trapped you into this buy, and had a heavy rejection in a sell-off, which 9 times out of 10, you would have took a heavy loss or blew your entire account if you were new to trading and you didn't know how to read this. So what you want to do in these levels, you want to find good support and resistance levels, which we do have here. And then once you find those levels, since we're on the 4-hour chart, these support and resistance levels right here of levels of support would most likely be more detailed on the 1-hour chart. But I don't really go past the 4-hour chart because I like to swing trade. and I like to scalp off of the 4-hour chart for better trading ranges in order to pick up bigger moves. The lower you go down on charts, the smaller your moves of trading. So the smaller the move will be on a chart. So for instance, we have this move here, broke all the way to the upside on this 4-hour chart, and then we got hung up at this level. So most likely here, you would have saw the market get hung up on the hour chart, and you would have saw tons of candles channeling in this area. So I use bigger time frames in order to find um, bigger moves in the market. I like to swing trade. There are people who like to scalp. You can use the overall trading strategy that you will learn here to either scalp or swing trade or turn scalps into bigger trades that you didn't realize that you were into just based off of certain rules to this strategy. And we'll get into that in more detail as we get into the strategy. So again, we have support and resistance levels on your charts and price action. And again, if you're new to trading, price action is pretty much what each one of these candles did within your window of time. So each one of these candles represents 4 hours. So you have 4 hours worth of movement or 4 hours worth of price action in each one of these candles. So each one of these candles tell you a story of what the market did in 4 hours worth of price. So here we have these levels, correct? So what I like to do at these levels is get my rectangle drawing tool, and then we will mark out levels of price action at our support and resistance levels. So we will mark price zones at each one of these levels in order to find better trading results. So here you had the market channel and go into a high. And the market got choppy once it broke out this level here. And then the market pushed to the downside each time and then finally broke out. So on this level, we want to go to the left and see, hey, that the market did touch here 3 times and it failed every time that it touched. So at this level, what you want to do is, I generally take this whole level because this is where the market failed at and couldn't rally above several times. So you take this whole level and mark it out like such. And then you'll find the next swing level, which was here, that the market bounced off of and went back to the high side and retouched your previous level that you marked multiple times. And as you can see, the market swung here, the market swung here, and the market also swung here. So here, zoom in, and you find wicks. And wicks will be these little bitty black lines that are on top of your candle. So think of them as the wicks that you burn on a candle. The longer the wick, the fresher the candle, or the higher price went. The shorter the wick, you have less burning room on your candle. So price didn't move that high off of the wick, or price didn't shoot that low off of the wick. So what you do is you want to find multiple wicks, like here, 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 so on and so forth. You find these wicks, and then you go to the top of that wick, or the biggest wick, or one of the longest wicks you can find, and you go to the top of that wick, to the body of your candle, and you mark that level off, making sure you try to grab some of the lower wicks to the downside in order to have a better range of price action. And you want to drag this across, you line it up with the candles to the downside, and you set that on your chart. And you do this for every area that you find where the market has had a swing area from. So you can expand this just a little. Drop the bottom of these candles here. Now once you do this, you want to go back and you want to delete all your hard support and resistance levels because you no longer need them on your charts, because you no longer want to reference those levels trying to find where the market is going, because you have a better roadmap with these price action levels that'll give you more detail on where the market would like to go. So now once you have these levels of price action, you want to zoom in and you'll see, you can actually drag this one down just a hair. All right, you'll see where the market has came up to your original support and resistance levels, and the market has failed through this level here. And then the market rallied up, fell through the level again multiple times before it finally pushed up to the upside. So these are zones of price action. And once you find an entry into a zone, 9 times out of 10, you can ride that entry all the way up to the next zone. And then you can ride the entry all the way down to the next zone. And this is called zone to zone trading. So here you have your price action and you have your price action zones. So you can be able to see that price is respected each one of these zones. Price channels throughout these zones in order to find your highs and your lows in the market. So having hard support and resistance, such as here, hard support here, and the market found this area, but the next time the market came down and it gave you a nice little trade to the upside, you missed your trading opportunity waiting for the market to touch your zone. And again, you had a nice little trading opportunity to the downside and you missed the market because you were looking for it to touch this zone, right? But me, I only trade zone to zone. I don't look for trades in between zones because you have a lot of consolidation or a lot of sideways channeling in between zone trading. So I like to find a good entry once the market has touched my zone, the price action has told me what it was going to do within my zone. And then I found an entry, and then I rode price back to the top of the zone. I took my profit here, and I had a nice trade. And if you see that the market came right back down and pushed right back down to the previous entry that you took, and you could have took profit again here. If you were trading zone to zone, this is a trade that I would have took because the trade actually kissed my zone here and rejected. And you would have knew how to get out of the trade here by previously looking to the left that price failed 3 times, 4 times, 5 times to break this level. So you could have took the trade from here and exited anywhere in this area and still made good profit. So this is pretty much how you mark out zones. You find the support and resistance levels on your chart, and then you go and map out areas of price where the market has respected support, channeled resistance, respected support, channel resistance, and broke down to a new level of support. And vice versa here. It channel support, broke through that support zone, turned that support zone to resistance, and broke up to a new area of resistance. So you mark these out on your charts, and you will have a better picture of market direction based off of price action and zones of price. So I don't like to use hard support and resistance because of this. If I have resistance marked here, you can see that the price action drove me straight up to the upside. I would have tried to enter a sell here, had a sharp selling range, and then the market rallied heavy with the bulls are to the upside, and I missed this trading opportunity looking for sales in this area that the market was in between zones, and I did not have enough room to the downside to make the trade. So I'm only looking for nice trade entries that are going to give me nice risk to reward. I want to see, anywhere to 2 to 5 times my risk. So if I'm risking, $100, I want to make $200 on a trade, $500 on a trade. So you have to look at the market like that. Would you take a small area of price, pulling back into a zone, or would you want to take this huge area of price and push up and catch this entire movement? So that's what I like to do. And you can make zones as deep down as you want, and you can catch more levels of price. Like here, you could pull this zone down to touch this candle, and you'll pick up all of this noise in the market here. And noise in the market is just pretty much, the wicks to the upside or wicks to the downside, where the market made a move and then it shot right back up, or the market made a move to the upside and it shot right back down. These wicks are considered noise. They're considered, static in the market, where the market has made some noise, but it did not leave, a body, of price. Shot down, and then the market rallied to the upside. So this wick didn't leave anything but a trail to base what price was doing in the market. Same thing here, same thing here. You see these heavy wicks, then the market pushed up off those wicks and rallied in the opposite direction. Same thing here, market pushed down off of this wick from the upside and rallied down in the opposite direction. So if you put these zones on your charts, you have a better picture of what price will do once it reaches these zones. If you just have a hard resistance line here and you don't have all this channeling of price here, the market breaks this resistance line and you have all this empty channeling of price action. It's harder to find where the market is going to break to the upside, or it's harder to find the market breaking to the downside because you're so focused on one simple line on your charts and you're not focused on what price is doing within this entire channel of that zone. So just to leave this with you, it's better to trade these zones. Price action, you want to trade from zone to zone. You'll get better fluid movement that way, and you'll be able to have better entries and better exits, because if you enter at the zone, and I'll show you how to find these entries, in the complete strategy. You enter here at the zone and you see that the market failed here to go lower to pull back into this zone, and the market rallied to the upside. And even if you took the trade out here, you made a great entry and a great exit. You caught nice pips and you had an amazing trade. You caught almost, 1,000 micro pips here to make you a nice, healthy profit, no matter what, your lot size was: 10 cent, 5 cent, 2 cent, $1, $5, $10, $20, $100. It all depends on what, the equity in your account will allow you to trade. So here was a nice trading area off of this support zone, went straight to your resistance zone, and you took profits there. So again, I'll show you this in, the later all tie down of the entire trading strategy of how you put price action at your zones of, support and resistance price levels or price zones, how you tie those levels in to price or price action in order to find this entry to the upside, or in order to find this entry to the downside, and how you can tell if price will return from a zone and rally back up, or as price did here, it rallied off of the zone and then shot back down to your next zone. And how did you know that this trade wouldn't continue all the way to the upside? We'll get into that in more detail in the next video that's going to tie all this together. This is a simple, short, straight to the point, trading strategy that if you just put these simple little tools together, you'll have massive results in the market. I don't want to go dibble and dabble into every little thing that you are not going to have to use in order to be a profitable trader into the market. I'm showing you simple, straight to the point, precision trading strategy that anybody can use. You don't need all these indicators on your chart. All you need is support and resistance price zones, market levels on those zones, and what price action does at each one of those levels will guarantee put you into good trading, positions in order to be profitable on your charts. And the next video is going to be tying all this together, showing you how the markets has failed at a zone and rallied to the upside or to the downside, and how you would make entries at each one of those fail points, each one of those key price zones, in order to find great entries and great exits. This is a great strategy. You can use this simply. You don't have to overcomplicate things using the strategy. Again, like I said previously, once you overcomplicate the market, you will fail as a trader because you're putting too many things and trying to bunch them up and ball them up and make them, into one great thing, when you can take one or two simple things like I have put together here, packaged here nicely, and put it together in a way that you can be profitable from this strategy. So if you use this strategy and you wait and have the patience and you use the knowledge that I'm teaching you here, I guarantee you 9 times out of 10, once you make an entry into the market, that entry will go in your direction. So don't overcomplicate your charts, putting all these, you know, indicators on there and basing your trades off of indicators that are, made for market conditions. All you need is price, zones, price action zoning, and the patience to wait on the perfect setup, the patience to wait for trades to reach zone to zone. And then you go look into that zone and you break that zone down in order to find an entry off of that level. And you ride that entry until the market tells you otherwise. Once you enter the trade with this strategy, you will have the confidence to know that, hey, this trade is going to go my direction because I followed these one or two simple rules and I put myself in a good position to make money from the market. The market is 90% not mindset and 10% skill. So once you start overcomplicating the market with 90% skill and I only need a little bit of mindset in the market, you're going to fail because psychology plays a part in everything. Because I guarantee you, if you're new to trading and you jump straight in, you jumped in some trades sometimes, and your mindset completely made you fail. You jumped into a good trade, and the trade pulled against you a little or pulled against you a lot, and you took that heavy loss or you took that small loss multiple times until you completely wiped out your account. And you never learned why every time you took a loss, whether the market knocked you out or you got scared and you took the loss yourself, why the market then, as soon as you took your loss, rallied into the direction of your trade, and you're mad and you're sitting there frustrated and wondering why you're missing these trades every single time. And it's because your mind is conditioned to follow all of this crap that is out there about trading the markets. Once you remove all of that from your mind, everything that you have learned about trading the markets, and you use this simple strategy. This strategy is 90% profitable. Sometimes you will have, market conditions and situations, the markets where trades will just fail. That's just part of trading. But if you sit here and you use this strategy to the T, I guarantee you 90% of the times, once you execute this strategy in any market condition, when you have good price action, you don't want to use this in a consolidated market. But once you have good price action flowing up or down, you can implement this strategy on your charts, and I guarantee you, you will find profits. So thanks again for watching this lecture. Hope you learned something. I hope this opened up your mind to how simple trading the market can be. This is made for Forex markets because I really don't trade any other markets. I dibble in cryptos every now and then, but I like to trade Forex because it's safe. Currencies, paper currencies that I'm trading, has been around for a long time. With cryptos, it's something new. You know, anything can cause those markets to move that you really don't know about because they're so new. They're not as transparent as, these hard currencies that's been around for, you know, thousands of years. So just take this simple formulated skill set right here that I'm teaching you, put it together, And I promise you, you will find success in the market. Just have the patience to trade this strategy, and you will make nice profits. So again, I thank you for watching this lecture. I hope it showed you something. I hope it opened up your eyes to how simple the market can be. And the next video will tie all this together and give you the perfect entry and exit strategy on how you can find great profits in the market. Thank you again. I appreciate your time, appreciate your patience, and happy trading.